How's it going, everybody? It's Stas here, and in today's video, we're going to be doing an overall market update, breaking down the Dow Jones, the S&P 500, and the NASDAQ. We're also going to be doing a trading update, talking about what I personally did today in the stock market, plus a bunch of stocks and ETFs that I'm watching and looking to trade here amidst the craziness that we've been experiencing here in the stock market. And in general, I want to go over what the market's been doing in these past 2 days, because yesterday I didn't upload a video, but we saw the market see the biggest crash since the 1987 recession. And the day after, which is today when I'm recording this video, the market pretty much erased every single one of those losses. Every percentage lost yesterday, we pretty much gained back today, as the S&P is up almost 10%, which yesterday it was down 10%. So I want to go over my opinions here. Is this another bull trap? Is it time to buy stocks here? And that's pretty much it, guys. That's what we're talking about here today. Hit that like button. Consider subscribing if you want to see further content like this. And claim your 2 free stocks from Webull, valued up to $1,400 with a deposit of $100. And that is linked down below in the description box. So today, the S&P 500 rallied 230 points, up 9.29%. This stuff is absolutely insane. This is like, you can't make this stuff up, guys. Up 10% one day, down 10%, up 8%. This is a market that no one in history has really experienced, right? This is just nuts. And this is mostly because Donald Trump issued the CV as a national emergency here in the United States. He had a meeting, I believe it was at 3 p.m. Eastern Standard Time, and if you see how that correlates to the S&P 500 here, at around 3 p.m., let's say more like 3:30, this market rallied 150 points in the matter of 20 minutes. And let me pull up my notes here for you guys to see, to show you all exactly why I think the market rallied here. So, again, he declared it a national emergency, a move that gives him authority to use federal funds to combat the CV outbreak. The declaration from Trump was largely expected amid growing calls on Capitol Hill for the president to use the law to free up funds to assist Americans affected by the outbreak and ramp up testing, which is huge. A lot of people have been arguing and saying that the U.S. is way behind on testing compared to other countries, which I would have to agree with, to a certain extent. And this, in general, is really what pushed this market up, right? In my personal opinion, in this last, 30 minutes, 20 minutes of today's session. And guys, you have to realize, he's going to put this money, the government's going to put this money to use in the states that are mostly affected by the CV. And I believe New York was at the top of the list. I'm sure if you guys do more research, you can see, what other states are mostly going to be, affected by these federal funds. But either way, it's a pretty good sign in my personal opinion. And another thing here is, we're getting $1.5 trillion of liquidity pumped into this market, which I forget how that's going to work. I think it's $500 billion. Yesterday, I think they did $500 billion, and it's going to be another $500 billion and another $500 billion spread across, I think it was a couple days or whatever, and I'm sure you guys know, and drop a comment down below to clarify that. But $1.5 trillion of liquidity, and that is arguably why the market exploded in yesterday's session in a similar fashion here, from 25.10 up to around 26.60 in the matter of, no joke, 15 to 20 minutes, right? That move was a 6% move in the S&P in 15 to 20 minutes. Again, you can't make this stuff up, guys. This is absolutely, utterly insane. So that's kind of it here for the S&P 500. And in terms of some technicals, the downtrend is still intact despite today's massive, massive rally. And honestly, guys, that leads me to believe this is a bull trap. It really is a bull trap. I think there's still more downside, and I'm sticking to my theory of shorting every single rally that we are seeing here in the markets until the CV situation kind of calms down, until we maybe get a vaccine, and who knows when that will happen. It can be in a couple months, in a year, who knows, right? So for the time being, while this volatility is here, and I think it's going to remain here for a little bit, right? Maybe a couple months, whatever, we'll see. But in the time being, every rally that I'm seeing, I'm looking to maybe buy some puts, maybe play TVIX, which goes up whenever there's volatility, right? Maybe SPXS, which is a direct play on the S&P if you're looking to play a 3x what's it called? A 3x leverage ETF. SPXS goes up whenever the S&P is going down, right? You can play that. So for me, the 50 SMA seems like a very strong resistance here, as we've gotten rejected there multiple times over these past 3 weeks, ever since this market has taken a massive drop, right? So if we do get rejected here, let's say Sunday, the futures markets, they open, they're down quite a bit, that could signal a further sell-off heading into Monday, right? But on the flip side, let's say we gap up. That could also happen, guys. No one knows what's going to happen here. You have to realize we could for sure gap up, and honestly, if we do, the S&P does have some room to rally. I'd say maybe 28.75. Who knows, right? But ultimately, we're still in a downtrend. And I'm personally waiting to see what happens Sunday night in terms of these futures before really planning out my next week of trading, right? And if we're taking a look at the Dow today, oh my God, guys, up 2,000 points today, up 9.36%. Yesterday, we were down 2,300 points, down 10% on the Dow Jones. And one thing I forgot to mention, the markets hit a circuit breaker yesterday. I believe they did. I'm pretty positive they hit a circuit breaker yesterday in the morning, which, if you guys don't know, if the S&P, the markets go down 7%, they get halted for 15 minutes. If they go down 13%, they get halted another 15 minutes. If they go down 20%, which would be insane, they get shut down. The markets do for the rest of the day. And will we see a 20% drop in one day? I really hope we don't. But if that does happen, the markets will shut for the entire day. So back to that Dow Jones, just like the S&P, still downtrending, right? The 50 SMAs of resistance here. Overall, 24,300, 200 is a major resistance as well. So watch for it to get rejected there. If we break up, there could be a little rally here, but ultimately, I still think there's more downside, to be completely honest with you guys, like I've been mentioning in these videos over the past couple of weeks. And the NASDAQ, excuse me, guys, again, the NASDAQ up 730 points today, up 10.07%, which is just crazy. And just like the S&P, the Dow, the NASDAQ is still trending under major moving averages, both the 50 and the 180 SMA, meaning this is still in a downtrend, guys, based on these technicals. And we saw tech today just go ballistic. This is something that I was not expecting to see, but we saw Microsoft up $20 per share today, guys. This thing was up 14%. Google up 10%. Facebook up 10%. Amazon up 6%. So this contributed to obviously the massive rally in the market, since these big companies comprise a lot of the market, right? And they also comprise a lot of the NASDAQ, which is why, again, the NASDAQ did better than the S&P and the Dow today. So overall, that's kind of what's going on right now in this market. Liquidity's being pumped in, national emergency over this CV. We have companies shutting down operation. We have supply chains being disrupted, which honestly, this could very well lead us to a global recession over these next couple of months. And what qualifies for a recession? It's 2 straight negative quarters of GDP. So if we see that over these next couple of months, we're going to be officially in a recession, guys, which that's going to be crazy, and that could cause even more turmoil here in these markets. So, in my opinion, stack up that cash. Even if it's $10, $20 a week, $100 a week, whatever it is, guys, stack up that cash. That's if you're able to, right? Stack it up and really save. Save for maybe some of these opportunities that we may be seeing here in these markets. And that's really how you can hedge against the markets dropping in general, holding cash, having that peace of mind that, yeah, you're not going to make any money, whatever, maybe 1% if you have a nice little savings account, but you're not going to lose money either. So you're going to have that peace of mind of having that cash ready to deploy in some of these stocks. Maybe now, there's some decent opportunities now, or maybe in the next couple of weeks if we see a further decline in this stock market. So let me know down below, what are your thoughts in terms of the markets right now? Any thoughts, guys? What are you buying? What are you selling? I would love to know down below in the comment section. Now, let's talk about what I personally did today. I personally traded SPXS today, which, like I mentioned a couple minutes ago, this is an ETF, a leveraged ETF that trades based upon the S&P, right? The S&P, let's say it goes down 9% in a day, down 9% in a day, like it did yesterday. SPXS should be up roughly 27%. And you guys can see here, SPXS was down 27% today since the S&P was up 9% today. So you guys kind of get how that works, right? And for me, I ended up getting into SPXS at around 10:30 a.m. this morning at around, let me look at my notes really quickly, guys, because I wrote my entry and exit here, at around $21.30. I saw this dip from $22.30 down to about $20.50. That was a nice 7% margin of profit opened. And once we started rallying back into the 21s, I saw the S&P around this time. We made a lower high. We started to dump aggressively. At this point, I nibbled some SPXS, right? $21.30. And I was watching it closely, but ultimately I put my limit order at $23, and that's where I ended up getting filled. So from $21.30 up to about $23. That was a pretty nice move of around 7% here today for me. And that's normally how I'm trading the volatility, guys. Again, I'm trading these market ETFs. I like trading volatility ETFs like TVIX, right? This is something that I've personally been successful doing over these past couple of years. And it's really good to trade this, in my opinion, when there is volatility, and that's kind of how I'm approaching this market, again, over these next couple of weeks. So let me know down below in the comments, what did you guys do in terms of today's trading? And let's end off the video breaking down some stocks here that just did insane today. We went over tech. Microsoft was up 14% today, which is just insane for a massive company like Microsoft. We saw J&J today up 7%. And in general, guys, when you're looking at the overall stock market and looking at individual stocks, you may notice how companies like J&J, some of these more quote-unquote safe companies like Pepsi, Coca-Cola, J&J, Procter & Gamble, Clorox. Some of these companies haven't got hit. They haven't gotten hit as hard as some of these other names like Uber, right? CCL, RCL, of course, the airline stocks, they've gotten decimated, right? So having some money, in my opinion, and I do have money in these stocks, in these quote unquote safe value plays, I think is a really good idea because they provide cash flow through recessions, right? And again, we may be going into a global recession here. And those companies, they have proven track records through recessions. So that's why I feel comfortable, and you guys see this in my M1 Finance playlist and my series there. I feel comfortable owning these companies for that exact reason. So I'm watching J&J here, no doubt about it. MasterCard, ticker symbol MA. I'm watching this one as well, up 12% today, up $28.50. We saw SPCE today, Virgin Galactic. This is the opposite of J&J, right? A very speculative company. This went up 6.3% today, up 88 cents. And when it comes down to Tesla was actually down today, believe it or not. Down $13 per share, down 2.49%. And let's take a look at those airline stocks. Let's see how those have been panning out over these past couple of days. Today, American Airlines up 6.39%. Delta Airlines was, let's see, guys, if this thing wants to load. Okay, come on, ThinkOrSwim. There we go. Delta up 14% today, up $4.65. And let's see the other ones. Save, Spirit Airlines, up 7% today. Love, Southwest, up 14% today. And honestly, guys, I think an interesting strategy here would be maybe playing puts on some of these airline stocks and some of these cruise line stocks that, honestly, they're at risk of going bankrupt. Let's be honest, guys. Not all of these are, but I think the government might come in and bail them out. We've been seeing that, right? Like back in 2008, the Great Recession, they bailed out the banks. Now they might be bailing out these airlines if they go super low and they're not accumulating revenue and they can't pay off their debts, etc., right? So that's interesting. For me, I would like to play a put on, CCL personally. I think this one has more room to go down. RCL, Royal Caribbean, was up 6% today, but still, I can see this thing going down even further. And just imagine, guys, let's say people that bought at 115, 116, 120, 130, and there's people that did buy there, their portfolio or their position is getting decimated. This thing went down from $135 to $28, which is a decrease of 80%, guys. So be careful with these. I would not go long quite yet, because, again, I see more pain in the future. So I'm looking to either short or play some puts, and we'll see what ends up happening there. Disney, DIS. Disney today, guys, they announced they're shutting their parks in Paris. They're shutting their park in Florida. I'm not too sure why they're not shutting. I don't know if they are, but I didn't see it particularly. But are they shutting down Disneyland in California? I'm not too sure about that, but Disney World in Florida for sure, and Paris, those are being closed, right? And if you guys don't know, I think this is a rough number. Disney's revenue is 30% from the parks business. So is Disney going bankrupt? I highly doubt it. There's like a 0.001% chance they're going bankrupt. But this parks situation, especially if it's closed down for a while, and I think they're closing it down till the end of March for the time being, this is going to be a pretty big hit in terms of their revenue, their earnings. So we may see an even lower price here in Disney stock. We actually got back to the hundreds today, but yesterday we were at $88 per share, which honestly, if we're looking 10 years out, I personally think that's a steal of a price on Disney. Sure, some people may argue, no, Stas, wait till it gets to 60, 70 bucks. Sure, that would be even better, but in the 80s, it's still a good deal, in my opinion, to start buying a little bit. And if my theory plays out in terms of the markets dumping next week, this is a bull trap. Let's say that it actually is, and we get another dump in Disney. I'm going to be buying some shares next week in the 80s. I would love to pick some in the 70s, guys. That would be a dream come true. You know, some people have dreams of buying Lamborghinis, you know, going on vacation to, what's that place called? Bali or whatever. But my dreams are to buy Disney stock in the 70s. That's my dream, guys. So let's go over some other ones. Disney, I just love it, guys. You know, this is down pretty much 50% almost. So actually, no, it's not, but it's almost there if it were to get into the low 80s again. So for sure, looking at Disney here. Another one that I'm looking at is Boeing, ticker symbol BA. This is one that I personally think does have more downside, especially as airplane sales are drying up right now. And of course, everything going on with the 737 MAX. They're, what's the word? They're having problems in terms of management, etc. I think there's more downside for BA. There's no doubt about it, right? But either way, if I'm looking at this company from a 5-10 year plus perspective, you have to understand this is a duopoly between BA and Airbus. There is absolutely no way Boeing is going away, that they're going bankrupt, right? That's just not going to happen. So for me, anything between 100, 130, 150 bucks is a steal for the next 5 to 10 years. That's just how I personally think. And once, let's say we go through a recession, travel declines, whatever, right? Like it does during recessions. Once we get out of that, more planes are being produced, more planes are being sold, travel's kicking up. Boeing's going to explode again. It's only a matter of time, but people don't understand. They really get caught up in the times, the media, the craziness, the volatility, that they don't think clearly from a 5-10 year perspective, right? Which is what you guys have to do. Don't let the media control your mind. Sure, listen to the media, but don't take what they say as 100% fact. You have to understand things for yourself, be informed, and really know what to do in certain situations. And the number one thing, guys, I know I say this all the time, but it's not to panic. Do not panic in these situations. I think the worst thing you can do is realize a capital loss here during this sell-off, especially if you have any sort of horizon of 5, 10 plus years. I know it's different if you're swing trading, right? Maybe people would cut losses if they're swing trading, but long term, you know, I think it's stupid to panic. Let's just put it that way, right? So let's talk about some other ones. What other ones do I want to go over here, guys? Google is actually getting pretty interesting. I think if it goes down to, let's say, $1,000 per share, anything under that would be a pretty interesting buying opportunity, in my opinion, for Google. You know, Uber today, we talked about it earlier. It's down a cent. What are the odds? Down 1 penny today, down 0.04%, and Uber is getting slaughtered. I don't know. I'm sure their revenues are affected because probably not as many people are taking Ubers. I would love to see what they do report in the next couple of quarters, but that's probably why the stock's getting crushed, because, again, not many people are driving Ubers, but I'm assuming a lot less people are driving Ubers right now. And another stock I think is interesting is Square, ticker symbol SQ. They actually reported a killer earnings report a couple weeks ago before this crash, and now they're almost back to $50 per share. And for a growth company that I believe in, you guys know that I'm bullish fintech, financial technology, that's what it stands for, right? Bullish fintech over the long term, and SQ along with PayPal Those are the two of the biggest players, I'd say. So SQ is for sure worth watching. Caterpillar today up 8%. Shopify has been, squashed over these past couple of weeks. This thing was 500 and what? Let's take a look at this 30-day chart. $590 per share just about a month ago. And now it's trading at $360 per share, or it was yesterday, and now it's at $390. So Shopify is pretty interesting here. If you're into growth names, this could definitely be one worth adding in these next couple of months, and I'll for sure be tracking it here on this channel. So I'm going to wrap it up here, guys. I hope you all enjoyed this video. Hit that like button if you did. Consider subscribing to the channel if you want to see further content like this. And don't forget to claim your 2 free stocks. Again, those are valued up to $1,400 from Webull with a deposit of $100. And that is linked, your 2 free stocks, they're linked down below in the description box. So I'll catch you all in the next video. Stay safe out there. Wash your hands. Just be healthy, guys. Stay safe. Thanks for all the support. I'll catch you all, and peace out.